Investors and traders, welcome to the channel. Today is 11th of July 2024. I hope everyone is having a great day. This video will be about the key US markets, and we will actually start by taking a look at the financial news that came out today. So let's take a quick look at that. This is coming from forexfactory.com. And here what we see is the core CPI coming out today. Now, because I'm based in the United Kingdom, this is the London time. This is the British summer time. This is why you see 1:30 p.m. But in the New York time, this will be 8:30 Eastern time in the morning. So what we had is the core CPI come in, and the month on month is actually less than what was there previously, and also was the forecast. So the inflation is kind of moving lower or lower than the expectation, and the CPI month on month was actually negative 0.1%, and the expectation was 0.1%. So it actually moved a tick lower compared to what it was there on the previous term. And then the CPI, which is Consumer Pricing Index, year-on-year basis, has actually also moved a little bit lower. So what it is indicating is it is indicating that inflation, per the Federal Reserve's efforts and targets, is actually moving in the right direction, which is lower. And also the unemployment claims, these came a little bit softer, which is, I believe, in my opinion, is good. So the expectation or the forecast was about 236,000, and 222,000 was the figure, the actual figure, and it was a little bit lower than what it was there on the previous term, which was 239,000. But what is really interesting is the kind of price action that we have seen in the stock market, and we'll get to that. Just wanted to really quickly show you the kind of summary of it. This is coming from the finwiz.com, and what we can see is the Dow Jones was almost flat with about 32 points or 0.08%, and NASDAQ, this is where it had a big massive fall of about 1.95% to the downside on closing basis. On an intraday basis, it was actually a little bit lower, so 364 points for the down for the day, and the S&P 500 was also down almost 50 points for the day. And look what the Russell 2000 did. It was in fact up by 3.6%, so that for a fair amount of improvement there. So this has some sort of rotational aspects to it. We'll actually discuss deeper about this one later on. And here, this is what we see is the heat map, and here we can see in the technology big names like Microsoft, Apple, they had moves to the downside, and these are some of these stocks. For example, Apple, I did a video about it yesterday. I'll put a link to towards the end of this video as well, and also a link to the video for the tech stocks done yesterday. So have a look at that. Apple had actually completed its pattern, the target that we were watching for. It almost reached that. So not a big surprise that actually it moved 2.23% lower. It had actually achieved what it wanted to do per the patterns. And Oracle gained a little bit. Tesla was down quite a big amount actually. And then if we just look at the financials, we see green here. Look at Google, look at Meta. So all those Google also completed its big pattern formation around 194. So that's also in the video. Meta was down 4%. So these tech stocks, big mega 7 stocks, AI related stocks, they are actually being hit. Here you go to Tesla, about down almost 8.5% today. So what were the kind of stocks that were doing that were in the green? It was quite a lot of those stocks were actually gold or the precious metals related stocks that actually did fairly well. If you see here this basic, you can see FCX, for example, there. These kind of the stocks actually in the base metals, precious metals world, they were green. So having said that, now let's actually move to our charts and have a look at we'll start by taking a look at the treasuries. So I'm going to take a look at the shorter end of the curve. So this is the 2-year treasury note. I am going to move down to the daily chart, and here we go. And what do we see? This is what we were talking about in our weekend review, that this market, in our opinion, is actually moving in this big ABCD cycle lower to about 3.9%. because it had broken the 38.2%, which was the 4.7% as a support for quite a few weeks. And we seem to be actually moving in this direction. Now we do have some support coming in around here, which is from this big massive trend line. Here we go, coming in from the lows of March of 2023. So we can see some sort of a consolidation or even a bounce from here, and moving below this will be really key for our target around 3.9%. Is what we think the bonds are actually doing, the yields moving lower. So let's have a quick look at the 10-year Treasury note, what it did. Here we go. And you can see big massive move in the 10-year Treasury note. This is a huge market, and it went up by I think 2 points or something if we just take the entire range from low to high. So the low was 110.13 and the open was 110.15 and the high was 111.50. Yeah, about a full point actually. That's massive for a market of this size. So what it is reiterating is that it's just gone and closed right at the top of this range, but it did move higher as well. So 61.8% retracement. That's the level that we are watching for it to actually break out of on the closing basis. But now there's more chance or evidence coming that in fact we are moving higher in this blue ABCD, which could see this market go as high as 115, which means lower yields. And if we were to take a look at the long bond futures, which is 30-year duration, here we go. Market snapped back up. I think it had nearly about a 2-point move, which is really large for a market of this size. So it looks like it wants to go test the top of this range again, right with 61.8% retracement, so around 120.31 seconds. And we think we are actually, in fact, slowly but surely moving in the CD leg higher. There's a number of resistance points that fairly that cause the market to actually have some retracements, but it finds support and it's forming a channel kind of formation here. So if I were to copy this and we just move it around here, so yeah, looks like it's actually moving in this kind of channel formation. So 120.31 is the 61% retracement of this range. Looks like the market wants to go there. We do have some inflation related numbers coming out tomorrow as well, so it'll be interesting to see what the market is like to do. And if we were to have a look at the ETF TLT, which is these treasury bonds of duration of 20 plus years, here we go. Actually, in fact, it closed lower, so this is really surprising to see a little bit compared to what the bonds were doing. And it seems to be a little bit weaker compared to the price action that we see in the futures. But what is really interesting is on the shorter end of the curve, the yields actually move a lot lower. So here, if it is in the CD like higher, which we think it is, then 95.55 will be the area that we could actually look at. Again, this all depends upon this support being held, this trend line. As long as it remains above that, the chances for 95.55 are there, and ultimately even a lot higher. Now, really interesting thing happening in the dollar. So here we go. This is the dollar index, and here the dollar actually, just like the yields moved lower, the dollar actually also moved lower. It's one of our macro scenarios that during this summer period till September, sometime in September, we're looking for lower yields, lower dollar, and precious metals higher, and commodities, soft commodities, actually neutral to maybe higher as well. This is the kind of thing that we are looking at. But also, having said that, the some of the stock indices, they're also reaching really critical levels as well, which we'll talk about from a pattern perspective. So here, what we think is this 107 level is a pretty important top here. The market formed a top, double top, and then a top and a top, a double top with respect to this top, and then a top, a double top around here as well. So there's multiple failures whenever it tried to reach the 107 level, so it failed. There was a chance that as long as this low is held, maybe it was doing an ABCD higher. That possibility still remains there as an alternative scenario, but the chances are that we are actually in this black ABCD, which is going to take the price lower right into this gray shaded box or at least down to about 102.80 or 103 level. So it'll be interesting to watch the market come and test the bottom of this trading range, but it looks like the dollar actually wants to move lower, which should actually help precious metals. And if we just take a quick look at the gold, here we go, we can see that the gold is actually really strong today, and in fact closed above this swing point, so it just adds to that. Also this weekend I will be doing a full report on the gold and silver markets, some really amazing kind of chart you'll be looking at. I don't think I've done that chart before, so stay tuned for this weekend for a full report on the gold market. It'll be very interesting to see for you guys from an educational perspective. So now of course it's opening up the top of this range here, and of course beyond that as well. Longer term we have 2500 to 2700 as the target for the gold market. And the way the gold market is moving looks like something really big is happening in these precious metals markets, especially in the gold. We could in fact see a $3,000 gold as well. That's a possibility, but per our analysis thus far, 2500 and then 2700 is what we are looking at in the gold. Moving back here, and then let's take a look at the silver market. Here we go. This is silver, and just to remind you guys that we are looking at the futures market. This is COMEX gold and COMEX silver. It's not the spot gold, spot silver, and if you are actually watching the spot prices, they will be different to the futures market. It's a different market altogether. So silver actually pretty strong. It's back in this ABCD in red here, and 35.30 is the kind of target it's pointing to, and that should be a pretty good spot as a target, because it'll be the 1.618 expansion of this. Along the lines, there's a minor resistance coming from 33.86 as well, and of course it needs to get above the top of this range, but looks like we are in this shorter term ABCD here, and there is gonna be a bigger one which I've not drawn, which we could actually do right here right now. Oops, here we go, and I'm just gonna take this leg real quick. Here we go, and let's see, this points to, yeah, this one points to in between this region. So we could actually get anywhere between 33.86, 35.30 will be the kind of shorter term target for us. But silver looks to be pretty good ever since it broke out of this triangle pattern. Okay, now let's take a look at the stock indices, or something really interesting happening there. Let's start with the NASDAQ 100. Here we go, and I'm going to move to the yeah, so here we go. So look at this, pretty quite a lot of sell-off that happened, and it happened right from this key level that we had been watching for a very long time. This is what we covered during the weekend review as well. So we have this big massive ABCD completing, also the 1.618 expansion at the 20,750 level. The market actually in fact moved higher, and then this is the weekly chart, and the week is not over, and then it pulled back today, and it's a fair amount of pullback. Now here's the key how I'm watching this market, because we do have a completed pattern, so always keep that in mind, and different markets are doing different patterns. The S&P 500, we like to take a look at the cash market for the longer term. It has not done its ABCD from the March 2022 lows. That actually points out to about somewhere in 6,000 region, which we'll also have a take a look later on, a little bit later on. So maybe this is what we're talking about at the beginning of this video, that there is an aspect of rotation going on. The certain artificial intelligence related stocks, the mega stocks, the easy stocks, which companies collect a lot of data, they have actually been big contributors to this bull market, and especially the NASDAQ market. So maybe if there is some kind of rotation coming, some of those stocks could actually pull back, and pull back rather quickly, because they have gone up a lot, and gone up in some cases rather quickly as well. So that could actually lead one index which has completed its pattern to pull back further, or start to pull back earlier, and maybe the others one will catch up, or they will also complete their patterns and then they will catch up. But there's certainly aspect of rotation going on, because we have seen the Russell 2000 being up 3% today. The S&P, the Dow Jones was also close to actually in the positive territory, and the New York Composite Index also closed higher today. So that's really interesting what is going on. So in my view, what we have is maybe we'll have some shorter term correction come into the market that could last, I don't know, maybe 4 weeks, 6 weeks. It could last some time, and it could be fairly choppy because of the rotational aspect. So here is how I am looking at this right now. So going back to this chart which I presented, or at least I put it in the description, these are the weekly ranges which you see in the top half of this chart. And here what you see is basically the daily the weekly range we can expect the market to move in points. And then it's +1 and +2 standard deviations, and -1 and -2 standard deviations. So it's a really key where the market is. So the market actually is approaching towards the weekly -1 standard deviation. So the bottom half, these are the daily ranges from the 8th of July. So ignore that, just focus on the top part, which is the weekly ranges. And the weekly range for the -1 standard deviation is 20,235. And it had actually gone up a lot. And here, this is something I want to point out, that what the market had done is it had gone very close to the +1 standard deviation level. So actually, I really have a quick look at what was the high here. The high was 20,983. So that was the high, 20,983. So in fact, what the market has done is it has, in fact, reached its, or came very close to the +1 standard deviation level for the NQ, or NASDAQ 100 stocks. And now, when we had this rather really quick pullback today, it went back to the mean, which was the starting point or the close of the previous Friday, and in fact went lower on closing basis. And looks like this is the -1 standard deviation level that it wants to achieve. It has already achieved the +1 standard deviation, or it came very close to it. I think it exceeded a little bit. And here, this is the -2 standard deviation. So this is the real key number. In the last 18 months, it's only happened maybe 3 or 4 times, I think only 4 times, when the market has closed at or around a little bit lower than the -2 standard deviation level. So it's not really expected for the market to get to these levels in a given week. So we are going to pay a really close attention to this level. If the market begins to close below this on the weekly -2 standard deviation level, then we'll actually begin to pay a lot more close attention to it, and maybe there is something else which is going on, because it's only happened in last 18 months 3 or 4 times, and the last time it happened was April of 2024, and we had a correction which lasted about a month or so, and about, I don't know, we saw the correction of about maybe 5% or nearly 8% maybe in NASDAQ, and about 5.6% in the S&P 500. So this is what we are watching, and I think that will give us the really good and clear indication that, okay, maybe a pullback of some significance might be happening. And the other reason is we have this completed pattern right here, this big ABCD, 1.618 expansion of the BC swing, which is the entire 2022 bear market, and 100% projection of the lows from the COVID lows to the highs reached in early or late November 2021, when the bear market actually started. So really critical levels where the market is, and if it pulls back a little bit, to be honest, that's not a big surprise for me. I still think that by the end of the year we could actually see, at least on the S&P 500, a higher print. Just because the NASDAQ is completing these patterns, we'll have to wait and see how it will unfold. Now let's take a quick look on the ES E-mini futures as well. So this is the weekly chart, and here what we see is the market actually getting or reaching our and exceeding our targets, which is the this red box. And I want to bring in the standard deviation levels one more time. Here we go. So the +1 standard deviation is 5,712, and let's see what is the standard deviation that was reached. Excuse me, the high that was reached. 5707 and 3/4, and 5712 was the +1 standard deviation. So I think it's close enough because my calculations are a little bit approximate, and the prices do fluctuate. So I think, in my opinion, what we had is a situation where the stocks had risen a lot, especially the tech stocks. NASDAQ 100 +1 standard deviation level reached. ES did the same, +1 standard deviation level reached. And then market began to pull back towards its mean, which was the close of last Friday. 56.15 is the level, and then the -1 standard deviation comes in 55.17, and -2 54.20. So the market has quite a bit to go. If it also breaches the -2 standard deviation, that something we'll have to pay much close attention to. But the leader has been the NASDAQ, so for that will be the real key to watch, the -2 standard deviation level for NASDAQ 100, 19,880 roughly. Okay, and let's see the market. I think 56.15. Let's go to the daily chart. Here we go. 56, what was the low reached? 56.30. So the market came very close to its actual weekly mean, and with this kind of a bar, the chances are there is going to be a further a follow through, but we'll have to wait till the close of the trading day, which is tomorrow, to see what the market is likely to do. And also, especially for the case of weekly standard deviation levels, if the market, let's say, do reach that NASDAQ's -2 standard deviation level, we'll have to watch for a follow through. If there is no follow through, maybe then that was the level that we were expecting for the market to reach, and we could see the market bounce back. So here, really watching really carefully these standard deviation levels, and this is why I put them out. And you guys, please also pay close attention to these levels, especially the weekly levels. Okay, now let's take a look at also the S&P 500 cash market. I will just move. Yeah, there we go. So a bearish engulfing pattern formed, and in fact, it's an outside bar. It's an outside bar, so what it means is that the high of this is 56.42, and the high was 56.35, and the low is 55.76, and the low for the previous is 55.86. So it's an outside bar because it has not just fully engulfed this, but the high actually went above the high of the previous day, and the low actually went lower than the previous day. The kind of situation which took place, we can just spot it quickly on the chart, was a day we see on the 23rd of May, in fact. And then we had a bit of a follow through. In fact, the market went a little bit lower, right to the 38.2% retracement, and then began to move higher. So, and then we had a situation like this here. So we'll see, we could have an inside bar as well, because in these two examples there was an inside bar, and then finally when the low was taken out of this outside bar, there was a further move lower. We see the same thing happening around here as well. So interesting to see what kind of follow through we get tomorrow. And just because the S&P, the NASDAQ had reached that pattern, it's just at the back of my mind. So I'm just really watching these markets very carefully. Okay, and then on the weekly chart, here we go. There we go. So this is what I was trying to point out. One thing is that look at this blue line. This trend line is so nicely in place. It's just support is intact. This is the big ABCD one-to-one price projection in black. This is it points to about 6,100 roughly. That's the equivalent of the ABCD one-to-one price projection cycle that we have seen on the NASDAQ, but the NASDAQ has been a leader, really strong. So waiting to see different markets are in different phases doing different things. Whether it's going to be a situation that the S&P 500 also catches up, later on during the year, and then complete its pattern, or it might not do that. So it actually, if the market actually begins to sell off further from these levels, because the market has reached these key levels as well. So really interesting juncture where we are right in the markets at the moment. And if we take a look at the Dow Jones, this is the futures chart. You can see the market is pretty strong. This is what we discussed over the weekend review video, that's likely to close or challenge these highs and maybe go up to the 42,000 level, which will be the 1.618 expansion of this BC. Swinging on the daily chart, let's take a look on the daily chart. Here we go. You can see it's testing the top of this range, and we have this gap between these two red lines, and the market is already into this gap. So it'll be really key to see how this market will actually close the week. And the interesting thing is the market was actually close positive, a small amount, but still close positive, whereas we have seen about a 50-point drop in the S&P 500. So it has to do with the rotation, I would imagine. Then let's take a look at the Russell 2000. There we go. Russell 2000, look at this massive move on the daily chart right here. Look at this. Because these stocks are very interest rate sensitive, and the CPI report came in favor in the sense that it helped move the yields lower. So it really helped these stocks, and we have seen a massive move higher. And if I just move on to the weekly chart for this, and this is something which we had been discussing for quite some time, that we believe that we are in a trading range, and now it's testing the top of the range. And as long as this level of 1920 is held, this ABCD could be completed around 23.15 level. So really, which will actually take it right to the top. So again, if you look at this whole thing as a big trading range, this market will again be challenging the top of the range. And the other important thing I want to point out is when we had this big massive retracement, this big bear market, it just retraced about 50% of this low from 2020 to the highs, which came in about 8th of November 2021. So there has been a lot of talk about the market's breadth and how the Mega 7 are actually leading the markets higher. And with this kind of price action, that should actually also help the breadth of the market. And also, if you look at the S&P 500 on an equal weighted basis, so that we try to neutralize the impact of these Mega 7 stocks, which contribute an X amount per price move, in terms of their weightage in the indices. So that's another aspect to look at. And last but not least, let's take a look at the New York Composite, New York Stock Exchange Composite Index. So this one has about 2,200 stocks, including ADRs. So fairly wide and broad index. And look, fantastic looking. This is weekly chart. The week is not over, but looks like it wants to go to 18,570, maybe a little bit above that. And here we go. This is the daily chart, and here you can see a really strong close here. 18,590 is the target we are looking at shorter term. Now I'm going to show you something really interesting, and that is we are going to take a look at the international markets and mainly the European markets. So let's take a look at the FTSE 100. This is the UK market, and here in the United Kingdom, we have had elections, general elections, and there is a new party which is in charge. And in fact, our correction started in this market in the month of May, and it just retraced. How much it retraced by? This is the concept of market symmetry. This is the retracement it had done before in this recent cycle, and it has thus far retraced exactly the same amount. And then also put in like a double bottom here. What I'm really waiting for is for this swing to be taken out, hopefully to the upside, and then we could say, okay, we have a confirmed bottom, and of course we have this trend line here as well. And just wanted to point out that the markets in Europe are doing a different pattern, but also close to positive for the day. And if we were to look at the DAX, and of course they close earlier than the counterparts in United States. So this is the German DAX, and here there were elections which took place in France as well, and maybe in other European entities as well. Not entirely up to date with that, but in France for sure. And here you can see that it also started its correction in May. So the FTSE 100 and German DAX kind of in lockstep, and it retraced right between the 78.6% and 61.2% retracement. It's a fair amount of retracement here. And what we are looking at is this market also closed positive for the day. And of course these markets close a little bit earlier. So if the markets are able to get above this swing high, then I think we could see retest of the top of the range, and with a possibility of 19,162. So it'll be really interesting to see tomorrow, or my subscribers based in the United States also get an earlier indication how the Asian markets did and how the European markets performed, such as the FTSE 100 and German DAX in particular. Whether we see some sell-off coming in this market or not, and looking at some of the prices quoted by some of the CFD providers for these indices, when the NASDAQ was selling off and when the S&P 500 broad index was selling off, we did not see, or at least I did not see, that kind of selling pressure come in these indices. So maybe that is also an indication. So with that, apologies, the video is half an hour long, but I think we covered a lot of things, and also really interesting price action taking place in the marketplace. So maybe a video of this kind was due. If you like our video, please give it a thumbs up, and if you found this of educational value, then please do subscribe to the channel, and if you do, hit that bell icon button. That way you will know when the new videos are posted. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon, and have a fantastic day.